Welcome back to Did You Know? Today we're diving into one of the biggest questions every investor is asking: where to invest in 2025. But before we get into it, let me say this. You don't have to watch this video, just listen. The real value here isn't in the visuals, but in the information. So go ahead, put in your headphones and take a walk, hit the gym, cook, clean, work, or do whatever you need to do. Just let this play in the background, and you'll still get all the insights. Over the past few months, I've invested over $130,000, and my portfolio has grown by nearly 30%. And if you invest wisely, you can make money even when the market is unpredictable. In this video, I'll break down which stocks and ETFs are worth considering in 2025 and which investments you should avoid. We'll go through blue chip stocks, ETFs, dividend investments, and some common traps that could cost you money. So, if you want to know where to put your money in 2025 and make it work for you, stick around until the end. And of course, don't forget to like, subscribe, and turn on notifications so you never miss new investment insights. Let's get started. Let's talk about stocks. Specifically, which companies could be great long-term investments. Stocks are one of the best ways to build wealth over time. They let you own a piece of successful companies and benefit from their growth. And if you choose the right ones, your capital can increase significantly in the long run. So, why should you invest in stocks? First of all, they have huge growth potential. Historically, stocks outperform inflation and offer better returns than most other investments. You also share in the success of major companies. As a shareholder, you make money not just from rising stock prices, but also from company profits. Many companies pay dividends, meaning you get a steady stream of passive income on top of stock appreciation. And most importantly, stocks are liquid, so you can buy or sell them anytime, unlike real estate or other assets that take time to cash out. Now, let's look at some specific stocks that I think are worth paying attention to in 2025. Apple. Who doesn't know Apple? It's one of the most stable tech companies with a massive market share. They consistently deliver strong financial results, innovate year after year, and pay dividends on top of that. Microsoft. A leader in cloud computing, artificial intelligence, and software. Their products are used worldwide, and the company has a solid track record of growth and profitability. NVIDIA. If you believe AI and computing power are the future, NVIDIA is one of the best bets. Their GPUs and data center solutions are crucial for AI advancements and the gaming industry. Tesla. Yes, Tesla can be volatile, but its long-term potential in electric vehicles and renewable energy is huge. If you see a future in EVs and solar energy, Tesla could be an interesting investment. Johnson & Johnson, and if you're looking for something more stable, J&DJ is a reliable company in the healthcare sector, with steady revenue and a long history of paying dividends. So, if you're thinking about investing in stocks, the key is to pick companies with strong fundamentals, innovative technology, and a solid competitive edge. It's not just about what's popular today, but about what has the potential to grow for years to come. Now, let's talk about ETFs, what they are, why they're worth investing in, and which ones could be interesting in 2025. If you don't want to spend time picking individual stocks, ETFs are a great choice. Think of them as a basket of stocks, where instead of investing in just one company, you invest in dozens or even hundreds at the same time. That means lower risk, greater diversification, and more stable growth. So why are ETFs so popular? Diversification. You invest in multiple companies at once. So if one stock drops, others can balance it out. Lower fees compared to traditional mutual funds, which often charge high management fees. Lower risk, because you're not betting everything on a single stock. The ability to invest regularly. You can invest gradually and benefit from long-term growth. Now, let's go through some specific ETFs that I believe are worth watching in 2025. S&P 500 ETF. If you're looking for stable growth and long-term returns, S&P 500 is a solid choice. This ETF invests in the 500 largest companies in the US, and historically, this index has grown by 8 to 10% per year on average, making it a great option for long-term investors. Chinese Tech ETF, KWB. China is the world's second largest economy, and its tech sector has massive growth potential. If you believe that Chinese tech giants like Alibaba, Tencent or Baidu will continue to grow, this ETF lets you invest in the entire sector without picking individual stocks. Dividend ETF, SCHD. If you're looking for stable passive income combined with capital growth, this ETF is a great option. It includes companies with a long history of paying and increasing dividends, making it a solid choice for investors who want both stability and returns. In 2025, ETFs will remain one of the best investment options for those looking to invest safely, efficiently, and with minimal fees. Choosing the right ETFs can help you build a strong portfolio and achieve long-term financial independence. Now, let's talk about dividend investing, one of the best strategies for building passive income. When people think of investing, they often imagine fast capital growth, but not everyone wants to gamble on stock price fluctuations. Dividends offer stability, regular income, and the potential for long-term capital appreciation. So, how does it work? It's simple. If you own shares of a company that pays dividends, you get regular cash payouts that you can either spend or reinvest to grow your portfolio even faster. And why are dividend stocks so popular? Regular passive income. Some companies pay dividends every quarter, and some even pay monthly. It's like getting a paycheck, but without working. Lower volatility dividend stocks are generally more stable than growth stocks, meaning fewer wild swings in your portfolio. Inflation protection. Companies that consistently increase dividends help you maintain purchasing power even when prices rise. Compound interest. If you reinvest your dividends instead of cashing them out, you accelerate the growth of your investment over time. So, what are the best dividend stocks for 2025? Realty Income. If you're looking for monthly income, Realty Income is one of the best options. This company has been paying dividends for over 25 years and specializes in commercial real estate rentals. Johnson & Johnson, a solid company in the healthcare sector with consistent profits and a long history of dividend increases. Procter & Gamble, a massive consumer goods brand that has been paying dividends for over 60 years. Their products are used daily worldwide, making this one of the safest long-term investments. Coca-Cola. If you want something time-tested, Coca-Cola has been paying dividends for over 100 years and continues to increase them. SCHD ETF. And for those who don't want to pick individual stocks, SCHD ETF invests in top dividend-paying companies, providing steady returns and capital growth. Dividend investing is perfect for those who want passive income while also growing their capital over time. If you choose strong companies with a long history of dividend payments, you can build financial stability and a reliable income stream for the future. Not every investment is a good investment, and in 2025, this is more true than ever. If you don't want to lose money, you need to be careful with high-risk, speculative, or simply bad investments. Let's start with stocks that lack strong fundamentals. You've probably seen stocks that look incredibly cheap, and are all over the news and promise big things. But the reality is, if a company doesn't have stable revenue, a clear growth strategy, and is losing its competitive edge, it's a huge risk. A perfect example, WeWork, once a massive company with big ambitions, now bankrupt, or AMC Entertainment, a former meme stock that retail investors pumped up, but it still struggles fundamentally. Then there's Nikola Corporation, which was supposed to revolutionize the electric vehicle industry, but ended up in scandals instead. If you want to avoid these traps, watch for these warning signs: high debt and declining profits, big promises without real results, stock price driven by hype rather than a solid business model. And speaking of hype, let's move straight to cryptocurrencies with an uncertain future. Crypto can be a great investment if you pick wisely, but most of the market is still highly speculative. Think of Terra Luna, a massive project that collapsed, wiping out billions in investor funds. Or SafeMoon, which promised a lot but had no real utility. And then there are meme coins like Dogecoin and Shiba Inu, which only grow because of social media trends. How can you spot a risky cryptocurrency? It has no real use case or long-term plan. The development team is unknown or has a bad reputation. The price skyrockets only due to internet trends. The same applies to meme stocks and social media-driven investment trends. You might have seen GameStop surge, but the truth is, its business model is outdated. BlackBerry? Once a legendary brand, now without a competitive product. Bed Bath & Beyond, a retail company that didn't survive and ended up bankrupt. If a stock only grows because of viral Reddit posts and not because the company is actually growing, that's a huge red flag. Another risky investment in 2025? Speculative real estate. The housing market looks attractive, but some segments may already be overheated. Where should you be careful? Overpriced apartments in major cities, prices may have already peaked. Airbnb properties in oversaturated areas. New regulations could significantly reduce profitability. Office spaces in small towns, with remote work on the rise, demand for offices is declining. And finally, the worst investment is the one you make without a strategy. If you're buying stocks or crypto just because you heard about them online, without doing your own research, you're exposing yourself to massive risk. How can you avoid this? Have a clear investment goal. Do you want capital growth, passive income, or inflation protection? Diversify your portfolio. Don't put all your money into a single stock or sector. Choose quality companies and funds with a long track record of profitability and strong fundamentals. In 2025, it's crucial to invest wisely and avoid speculative or high-risk assets. Instead of chasing short-term trends, focus on stable stocks, high-quality ETFs, and investments with long-term growth potential. Smart investing isn't about luck, it's about strategy. Diversify your portfolio, follow market trends, and invest with caution to avoid unnecessary losses. Now you know which investments to avoid in 2025 to protect your capital and achieve better returns. Whether it's risky stocks, unstable cryptocurrencies, or speculative real estate, the key to success is a solid strategy and patience. Rather than reacting to short-term market swings, focus on quality stocks, stable ETFs, and assets with strong long-term potential. Diversification, strong fundamentals, and a clear investment plan are the foundation of financial success. If you found this video helpful, don't forget to like, subscribe, and turn on notifications so you don't miss more investing tips. And now, let me know in the comments, what's your investment strategy for 2025? Are there any stocks, ETFs, or assets you plan to avoid? Thanks for watching, and I'll see you in the next video.